1. The BIS as the Bank for Central Banks. The Bank for International Settlements, BIS, is the institutional apex of global central banking. Known colloquially as the Bank for Central Banks, the BIS operates behind a veil of strategic anonymity while coordinating policy, reserves, and interbank financial settlements across nations. Its clientele includes the most influential monetary authorities in the world, making the BIS one of the most powerful and least scrutinized financial institutions globally. Footnote: the BIS serves as a private monetary hub for central banks, centralizing global fiscal strategy without direct public accountability. 2. Origins and secretive power structure of the BIS. Founded in Basel, Switzerland in 1930, the BIS was initially created to administer reparations from World War I. It has since evolved into a permanent institution with immense influence over 95% of the world's GDP. Its bi-monthly meetings with central bankers are held behind closed doors, without published minutes, disclosed agendas, or public records, an intentional design that ensures operational opacity and insulates the BIS from democratic oversight. Footnote: what began as a reparations vehicle now functions as an undisclosed policy-making forum for the world's central bankers. 3. Legal inviolability and diplomatic protections. The BIS operates under international treaty protections that render it legally inviolable. Swiss authorities, for example, are prohibited from entering BIS premises without explicit consent. Its personnel and property enjoy immunity from civil, criminal, and regulatory jurisdiction. The BIS's unique legal structure places it beyond the reach of national governments, much like diplomatic embassies or supranational entities such as the International Monetary Fund, IMF. Footnote: the BIS's legal immunities shield it from national law, granting it exceptional autonomy unmatched by ordinary financial institutions. 4. Strategic relationship with the IMF and SDR custodianship. The BIS maintains a formalized relationship with the IMF, including custody and administration of special drawing rights, SDRs. It was the first non-member institution authorized to accept and manage SDRs, a synthetic reserve currency designed to supplement traditional foreign exchange reserves. Through this custodianship and its role in monetary reserve consolidation, the BIS exerts supranational influence far beyond conventional banking parameters. Footnote: the BIS amplifies its monetary power through SDR management and strategic alignment with the IMF. 5. The blueprint for monetary consolidation. The BIS has issued a strategic framework titled Improving the Old, Enabling the New, which envisions a unified global financial architecture anchored in a single central bank digital currency, CBDC. The plan proposes integration of all national currencies into a programmable ledger managed centrally by the BIS. This blueprint advances the idea that monetary authority should rest exclusively with institutions possessing historical and legal legitimacy, thereby discrediting decentralized currencies and private monetary innovations. Footnote: the BIS blueprint advocates centralized control of digital currency through a global unified ledger, dismissing decentralized systems. 6. Surveillance, behavioral enforcement, and financial sovereignty. The BIS openly promotes the use of programmable CBDCs that can be monitored and regulated in real time. In public statements, BIS officials have acknowledged their intent to impose usage restrictions, thereby converting money from a neutral store of value into an instrument of behavioral governance. A global CBDC infrastructure would eliminate financial privacy and subject all economic activity to institutional review and control. Footnote: programmable CBDCs allow the BIS to redefine currency as a mechanism of institutional surveillance and social compliance. 7. The BIS's rejection of decentralized and historical forms of money. The BIS's framework for monetary singleness systematically excludes decentralized forms of money, such as cryptocurrencies and precious metals, particularly gold. Despite gold's historical stability and universal recognition, it is incompatible with programmable systems and institutional control. The BIS's rejection stems not from inefficacy, but from gold's inherent resistance to manipulation and centralization. Footnote: the BIS excludes gold and other decentralized assets due to their incompatibility with programmable and controllable monetary systems. 8. The 5-year plan and lack of public awareness. In June, the BIS declared that 80% of its 5-year transformation plan, centered on governance reform and technological infrastructure, was complete. Yet this paradigm-shifting initiative has proceeded with minimal public awareness or scrutiny. The rapid advancement of global monetary centralization highlights a growing divide between public understanding and institutional momentum. Footnote: the BIS's transformation plan nears completion under the radar of public discourse, advancing global monetary centralization unchecked. 9. Defensive strategies for financial autonomy. Individuals retain recourse by reallocating wealth into assets that resist institutional oversight, such as physical gold, decentralized networks, and non-custodial systems. While legislative and political leverage is limited, financial sovereignty can still be maintained through conscious asset diversification. Public education and networked resistance represent vital tools in preserving economic self-determination. Footnote: sovereignty over personal assets remains achievable through decentralized investment and strategic knowledge dissemination.